The easiest way to save for your first home and slash your tax bill while doing it that actually works. Picture this. You're on your way to your home ownership in 2025 and you're taking advantage of tax deductions that could save you thousands. Let's make that dream happen. Welcome back to Tax Premier. I'm your host, Jonathan Wood, and today I'm taking on the challenge of saving you from your first home in just 1 year. We all know that buying your first home is one of the most significant financial decisions you'll ever make. But did you know that understanding and taking advantage of tax deductions for first-time home buyers in 2025 can make a huge difference? In this video, I'll share all the strategies I'm using to save for that down payment, including smart budgeting, setting up dedicated savings account, and tapping into tax benefits like mortgage interest, deductions, and property tax write-offs. Whether you're dreaming of your own space or simply want to maximize your tax savings, these tips can help you get there faster. Let's be real for a moment. When I first started thinking about buying a home, it felt like an impossible mission. I had no idea where to begin or how I was even going to save enough for a down payment. I even joked that I have to give up my daily latte and gourmet takeout. Talk about sacrifice. Have you ever felt overwhelmed just by the thought of saving for a home? Or maybe you just heard wild rumors about tax deductions and thought, that's only for the rich. Well, stick around because I'm here to debunk those myths and show you that every dollar saved counts. Drop a comment below with your funniest home saving sacrifice. You might inspire someone else to cut back too. Now let's dive into the core strategies I'm using to save for my first home and how you too can benefit from these tax deductions as a first-time home buyer in 2025. I've broken these down in several key areas. Start with by analyzing your income and expenses. Identify where your money is going and pinpoint areas to cut back. I was shocked to see how much money I was spending on non-essential items, subscriptions, dining out, and those extra lattes. Once I streamlined my budget, I freed up a surprising amount of cash funneled into my home savings. Use budget apps like Mint to track every dollar. The clearer you are on spending, the better you can allocate funds toward your down payment. Open a separate savings account solely for your home purchase as well. This keeps your savings distinct from everyday spending. Not only does this reduce the temptation to dip into your funds, but you can also shop around for high yield savings accounts to earn extra interest. Automate transfers from your checking to savings account each payday. This pay yourself first strategy makes savings effortless as well. And also, once you purchase your home, the mortgage interest you pay may be tax deductible. In 2025, these deductions can significantly lower your taxable income. You may also be eligible to deduct property taxes on your federal return. This deduction is especially beneficial for high tax areas. Many state and local governments offer programs that provide tax credits or even grants to first-time home buyers. Research what's available in your area. If you plan to invest in energy saving features like solar panels, you might be eligible for energy tax credits. These can further reduce your total costs. Also, keep detailed records of all expenses related to home buying. Organized documentation is key when it's time to file your taxes. The earlier you start saving, the more time your money has to grow. Compound interest can be a game changer. If you start saving $500 a month at the age of 25 and earn an average of 5% interest, you could accumulate over $150,000 by the time you're 35. So even small, consistent contributions add up over time. The key is to start early and stay disciplined. Automation is your best friend, so set up automatic transfers and treat your home savings like a fixed monthly expense. So for me, I set up recurring transfers on the day I get paid, so I never even see the money. It just goes straight into my dedicated home fund. Saving for a home is as much about discipline as it is about strategy. Celebrate small milestones along the way to keep yourself motivated. Remember, the sooner you save for that down payment, the sooner you can take advantage of home buyer tax deductions once you have purchased your property. It's a cycle. Smart saving leads to smart buying, which then leads to tax benefits down the road. Let's take a closer look at some of the tax deductions and credits that can make a huge impact once you become a homeowner. For many first-time home buyers, this is the single most valuable deduction. In 2025, if you itemize your deductions, you can deduct a substantial portion of your mortgage interest, especially in the earlier years of your loan when the interest portion is higher. This deduction can lower your taxable income significantly, meaning you keep more of your money in your pocket each year. So let's just say if you pay $10,000 in mortgage interest a year, that deduction can reduce your taxable liability by a sizable amount depending on your tax bracket. In addition to mortgage interest, many homeowners can deduct property taxes paid throughout the year. This is especially valuable in areas with higher property taxes. Combined with the mortgage interest deduction, these substantially offset the cost of home ownership. Also, keeping detailed records of your property taxes payments and any assessments are key. For 2025, there may be new or extended tax credits for energy efficient home improvements. This can include upgrades such as solar panels, efficient windows, improved insulation. Not only do these credits reduce your tax bill directly, but they also add long-term savings through lower energy bills. Before making any major upgrades to your home, research available tax credits and consult with a professional to ensure you're qualifying for these. By understanding these deductions and credits, you not only improve your savings rate now, but also position yourself to maximize tax benefits once you step into home ownership. It's about creating a win-win situation where your disciplined savings lead to immediate tax advantages and long-term financial growth. Here are some highlights that might surprise you. Over 60% of homeowners have less than 20% equity in their homes when they first purchase, but savvy first-time buyers who leverage tax deductions see a much faster increase in equity. I read about a first-time home buyer who, by cutting unnecessary expenses and maximizing her HSA and FSA contributions, managed to save enough for a down payment in just 1 year. Once she bought her home, the mortgage interest and property tax deductions reduced her annual tax bill by nearly 30%. The combination of disciplined saving, smart budgeting, and taking full advantage of available tax deductions can transform an overwhelming goal into an achievable dream. I'd love to hear from you. What strategies have you used or planning to use to save for your first home? Have you discovered any tax deductions or assistance programs that really made a difference? Drop your experiences and questions in the comment section below. Here's the ultimate game changer. By combining a disciplined savings plan with powerful tax deductions like mortgage interest and property tax write-offs, you're not just saving for a home, you're setting yourself up for financial security down the line. This breakthrough strategy could turn your dream home into a reality sooner than you imagine. Let's wrap things up. Saving for your first home is a journey that demands patience, discipline, and smart financial planning. Here's what we covered today. Identify unnecessary expenses and redirect those funds towards your first home. Automate and transfers. Keep your down payment funds separate. Understand and plan for deductions like mortgage interest deduction, property tax deduction, and even energy efficient credits. Also look into down payment assistance programs and state level tax credits available for first-time home buyers. The sooner you start, the more your money can grow. By integrating these strategies, you're not only preparing to be a first-time home buyer, you're maximizing every dollar to work harder for you. It's all about building effective habits, staying informed, and keeping your eyes on the prize. If you found this video helpful, please give it a big like. It really supports the channel and helps more people discover these tips. And also don't forget to subscribe for more personal finance and home ownership strategies. I post new videos every week to help you take control of your financial future. I'd also love for you to check out my video on tips for first-time home buyers, where I dive even deeper into navigating the home buying process from finding the right property to securing a mortgage. Leave your thoughts or questions in the comment section below. What's your biggest challenge when it comes to saving for a home? Your insights could help someone else on this same journey. Thanks for watching, and here's to turning your dream home ownership into reality.